Thank you so much for your time, Yinka. Now, first, I'd like to get a sense of how that bond auction is playing out.
Okay, hi Kenneth, how's it going? So in terms of the bond auction, we know the DMO is offering about 140 billion today. So across the 2023, the 2029, and then the 2049s. So market has been really quiet on the bond side. So what we're just waiting for is for the results. But what we expect is on the long end, we think stop rates will be somewhere about 12.3, 12.4%.
All right, but looking at how the market has played out this week, though, what has been your key highlights?
Pretty much what we're seeing on the Treasury Bills, we've seen a lot of buying sentiment. So people have been buying because there's some level of liquidity in the system. And so what we see is people buy, then towards the end of the day, they sort of take profits. On the bond, it's been pretty much quiet because everyone's been looking towards the bond auction today.
All right, I understand still on the Treasury Bills, we're seeing pockets of demand around the mid-tenors. Why is that?
So it's mostly around the mid and the long tenor. So like I said earlier, a lot of people are just taking profits because the yields look okay right now. So as to when they were bought, so people are just taking profits.
But
a lot of it is also
bond
on
auction, what are your expectations? How do you compare to how the bond auction played out last time?
We're going to see the similar because based on looking at inflation figures are at 12%. So really, there's nowhere else in the market where you can get a positive return. So it's mostly on the bonds, on the long-dated bonds. That's where you can get a little bit of a real return. So what we'll see demand because there's nowhere else to put money. So we're going to see demand, particularly on the long end.
Yeah, but looking at inflation figures, like you rightly mentioned, how do you see this trending for in the near term? We're still seeing the borders still closed, which is one of the principal things causing that. But what is your view?
Sorry, say that again?
Your view on inflation.
Mm-hmm. So we're going to expect that to continue to go up, but we think that the highest bit of it, the largest jump was what we saw this time, which was around Christmas. So a lot of the border closure, the effect of that was what we saw in the January inflation figures. So I should still expect to see a little bit trending upwards, but it won't be that much so maybe a couple basis points here and there, but that's what we'll expect to see.
All right, but let's look at the liquidity play in the market so far. How is that playing out?
So we've seen, I think last week we had about 1 trillion from bond maturities as well as the OMA maturities. So it's been pretty liquid in the market. So as of yesterday, it was about market liquidity was about 480, 500 billion. And there's nothing going on today. So we still see that liquidity in today. So it's about 2 to 3%. That's where we're seeing rates. And then tomorrow we have another 600 billion maturing as well. So we'll have about 1 trillion in the market. So market has been pretty liquid. So it depends on what the CBN mops up tomorrow's OMO auction, as well as whatever the DMO does, which will be on Friday where they do the settlement for that auction.
All right, Yinka, thank you so much for your time today. We'll keep our eye and see how that bond auction will play out today. I've been speaking to Yinka Yomi-Tokosi. She's the lead Asset and Liability Manager at Access Bank.